Hi, this is Amy Bonus. If you're buying your first home, a Mortgage Credit Certificate, or MCC, can save you thousands of dollars in federal income tax you owe. The MCC is not a loan program and can be combined with many different loans, including down payment assistance programs that allow you to buy with very little cash. The MCC is a federal program offered through NC Housing and can be combined with FHA, VA, USDA, or even conventional no PMI loans. It's not an interest deduction, but is a more powerful dollar-for-dollar tax credit that gets subtracted from the amount of federal tax you owe. So how much are we talking about saving? The credit is up to 30% of the mortgage interest you pay, or up to $2,000 a year. That's right, you can save up to $2,000 a year and still take the remaining interest as a deduction. This makes your net effective payment feel up to $166 less every month by reducing the tax dollars you pay. Let's look at an example. Steve and Eve are buying their first home. Their gross income is $50K. Their first year they own a home, they'll pay $7,000 in mortgage interest. Without an MCC, they would simply deduct this from their income, leaving $43K in taxable income. Assuming a 15% tax bracket, they would owe $6,450 in federal taxes. Now, let's see what the difference is with an MCC. The gross income would still be $50K, and they're still paying $7K in interest. However, instead of taking the entire $7K as a deduction, they're going to deduct 70% of the interest, or $5K, which makes their taxable income $45K and their federal tax owed $6,750. But now, they apply the MCC credit, which takes the remaining $2,000 they did not deduct and lowers what they owe to only $4,750. With the MCC, they save $1,700. This feels like their payment is $141 less every single month. And the savings are not limited to the first year. The MCC is effective for the life of the loan as long as you're living in your home. So could you benefit from an MCC? Well, there are a few requirements. You must be a first-time buyer or at least not have owned a primary residence in the last 3 years. This requirement may be waived if you're a veteran or purchasing a home in a federally targeted area. These areas can be found on NC Housing Agency's website. You must also use the home as your principal residence. Your sales price and income cannot exceed certain designated limits, which vary from county to county. The limits do go up on a yearly basis, though. Contact me for details. And of course, an MCC won't benefit everyone. For example, you cannot reduce your federal income tax if you don't owe any tax in the first place, of course. You should also be aware that if you obtain and use an MCC and then sell your house within the first 9 years, you may be subject to a federal recapture tax. Our underwriters and NC Housing will determine which buyers qualify for the MCC under the Internal Revenue Code guides. But we do not and cannot give tax advice. So talk to your tax advisor and see if an MCC will save you money and how valuable an MCC can be over the life of your loan. For many first-time buyers, the combination of the MCC and the low down payment options are fantastic ways to get into a home and boost your tax benefits. This puts more cash in your pocket every single month. Learn more about these and other fabulous programs by contacting me for details. I'm looking forward to talking with you personally.